Now we get into it, traders. Trading the 2B. The 2B is a trend following strategy, and many of you have probably heard me talk about the 2B and maybe even see me go over it fairly briefly in some of the members Q&As. And in the coaching program, the private coaching and my one-to-one coaching, we spend a huge amount of time on this because it really kicks butt. And when you look at the logic of it, it's just so sound. It's a trend following strategy which automatically puts you in front, but we're looking for two time frames to basically agree with the trade and to confirm the trade. Now, as we get underway with the session, as always, I do need to put the risk disclaimer up. There is a risk in trading. Do not trade with the rent money. Make sure that you fully understand the commitment and what you're doing, and once again, take the time in learning the strategy. Don't go live until you've mastered it. I should say, let me save it again. Sorry, traders, mastered the setups in simulation. First of all, as always, these recordings are raw, real, and unedited, so I'm not running to a script. Now, let's quickly start with this again. This particular chart. Now, I know I bring this up virtually every single video I record, and the reason being is that show me a trader that has a compelling future, that has a massive goal, that reaches for the stars. He'll at least, or she will at least, reach the moon. You've got to have a compelling future. Now, if you are targeting $200 a day and you're starting with 5,000 capital, no more than 2% risk, within 16 weeks you have the potential of earning $10,000 a week. That is on only $200 a day per contract. Now, I do have to say this, traders, what if your goal is only $100 a day? Where would that take you? It would take you around 40 weeks to reach this area of 10,000 a week. But what other opportunity do you truly know of where for 40 weeks, 3 or 4 hours a day, you can do it part-time, do it in the evening, trade the Globex session if you're US based, and basically over 40 weeks build up a business where you have the potential of earning $10,000 a week? There's virtually nothing out there like it. Now, the challenge is traders want to do everything overnight. They're impatient, and for most of you, you're working from home, you don't have a coach. It makes it a lot more difficult, and the purpose of these videos really is to give you a good slap around, show you what the potential is, and hopefully put you on the right track. So you can see here, whatever your goal is, if it's 200 a day and you've got 5,000, you can see the potential. Now, if you're a forex trader and maybe starting off with, say, a smaller account of maybe $1,000 and you're trading mini contracts, okay, what if it takes you 2 years? You are set for life. It really doesn't matter what market you're trading. It's all relevant with the setups. And I have to say that with the strategy, the 2B, it doesn't matter whether you're trading volume charts, tick, time-based charts. We're going to be looking at Renko, of course, and we'll have a look at a couple of charts there which are tick-based charts as well. So have a massive goal. Now, to do this, you've probably, or to achieve 200 a day, you've probably heard me talk about 5 by 5, and many of my members have a chance, my coaching members, 5 by 5, yes I can, 5 by 5, yes I can, which means 5 winning trades by an average of $50 each. Now, whether you're trading the NQ, that will be 10, 11 ticks. If you're trading the CL, of course, that's 5 ticks. If you're trading gold, it's 5 ticks. If you're trading full contracts on the forex markets, that's only 5 pips. Now, with the 2B, one of the exciting things about the 2B is you can set a higher profit target, and when we go to the charts, I'll explain why. So instead of targeting 5 by 5, you really only need 3 by 8. 3 by 8, yes I can. So basically three trades at $80 each, which is $240, around $225 after $5 in commissions per trade. So the 2B will give you a better rate of return as well. So let's go and have a look at some charts, and I'll start to give you a good rundown. So what we're actually looking at here, traders, we're recording this on the 2nd of October 2018, and so we're looking at gold, the gold Renko charts, and this is actually the Globex session from today. So you'll be able to go back over this and have a look at this. So it's the second, this is down under in Australia. It's now 5 p.m. so London market opens, by the way, in an hour. So we'll look at this, and we're going to look at a lot of different examples. So first of all, let me give you a quick rundown on the principle of a 2B. A 2B is where we have two time charts. We have our anchor chart, our higher time frame, where we want to be trading in the direction of the higher time frame. A very sound principle. And with our entry chart, we're looking for a pullback or a bounce off the EMAs on the entry chart, and at the same time we want to be having a bounce on the EMAs on the anchor. Now, to help qualify this, that is that when I get a pullback, and we can see here we've pulled back to the 200 EMA, for me to qualify the trade, and I've got one here. So if you look at this here, I'm bouncing on the 200. Over here I'm bouncing on the 89. Here I'm bouncing on the 200. Here I'm bouncing on the 34.89 as well. Here I'm bouncing on the 89.34 EMAs, and on my anchor I'm bouncing on the 34. Here I'm bouncing on the, besides the floor pivot, okay, so I'm bouncing on the pivot and the 200, and here we're bouncing on the 34. Now, because of these candles, and in this particular case the time frame for the anchor chart on Renko is 2 times higher, and the principle, it really doesn't matter, it doesn't have to be exact, but with gold that seems to work well. And so you might just have to test a little bit which is the ideal time frame, but I'll give you a guideline on this. We may not get it all done in this video today, but I'll get you well and truly underway with the strategy. So you can see here we've come down. We would normally call this a 200B, 200B, 89B, 89, 200B, and on the anchor chart it's an 89.34. You can see here we're touching both, and it's 34, and away we go. So it's a trend following strategy. Now, what I've done is I've put together some rules for you, a basic cheat sheet which I've uploaded, and it's on my Google Drive in the folder called New Recordings and Downloads. I've made it a Word document, so rather than saving it as a PDF, I've left it as a Word document, so you can add or subtract to this. You can add any extra commentary that you wish to make or put down on this list that may be more appropriate for the market you're trading, or perhaps even the platform that you're trading. So let me quickly go through this. The 2B is a trend following strategy with the entry signal being triggered as follows. Ideally, the 8, 34, 89 and 200 EMAs on the entry chart are trending in the proposed trade direction, okay, which is a good sound strategy. We want to be following a trend. On the anchor chart, the same thing, except I do add a 21 EMA. Now that's optional. Now the 21 will quite often come down and we'll tag the 21, but we may not have pulled back enough to hit the 34 or the 89. So I really like the 21 EMA being on the anchor chart for the 2Bs. On the entry chart, price pulls back and bounces off the 34.89 or 200. Normally, because it's got to be a deep pullback, normally you're hitting backwards of, or coming back to the 89 rather than the 34, because the higher time frame you're going to have a deeper pullback on the entry chart to hit the 34 on the anchor, and you'll see that again in a moment. Now the qualifier for me, because the candles on the anchor chart are still forming, remember we're getting in quite early with this, I require the T1 super scalper to plot. Now if you have a platform where you don't have the super scalper, don't worry about it, because if you're going to trade Renko, just look for 3 higher closes on a Renko candle. Okay, likewise, if you want to go short, look for 3 lower closes. So just remember that if you're trading with Renko, just look for 3 high closes. That replaces the super scalper, or 3 lower closes to go short. Now with TradeStation, I also have the ATR, and I look for an ATR stop and flip, but don't worry about that if you don't have the ATRs. We'll look at those little dots on my charts again in a moment, because as long as you've got those 3 high closes, because if you're using an ATR with a setting of 1.75 on the TradeStation indicator that I have, what you'll notice is if you get 3, it doesn't flip over until I have 3 high closes. So in actual fact, I could almost do away with the ATR stop and flip. So as long as I've got 3 high closes, that's a signal to go long in a trending market. We'll see this more on the charts in a moment. Now as you'll see here, you can have a much higher reward, so your risk reward ratio, and the reason being it's a deeper pullback. And so effectively what we're really doing is virtually trading 21 and 34 bounces on the anchor chart, but the entry chart allows us to get in much earlier. Okay, so we'll look at that very closely in a moment. Now so with the target, so I'll give you some guidelines there, but of course you can trail, you can target a previous swing high, swing low. There's lots of things there, but once you go back and you mark up 100 trades, of course, which is what you want to be doing, you also want to go through 100 trades on the simulator to really get your skill set right. You'll get a good feel of what sort of targets you should be going for. Now please also don't confuse the 2Bs with the 2Ds. They're very different. The 2B is 2 bounces with the trend. The 2D is a divergence trade. Okay, so very different. Okay, so the divergence trades are totally different. It's a counter trend trade, where with the 2B we're trading in the direction of the anchor chart. Now at times the EMAs on the anchor chart may be flat or even look like a counter trend trade because it's a deep pullback. Okay, but what you'll see, as long as you're still trading in the direction of the anchor chart. So once again, you can download this, read this, and you'll soon pick it up. So we can see here we've got, and you'd know that I call this a fanning of the EMAs. I also call this the sweet spot. What makes this so good is that, look at the risk reward. My stop would go with gold 1 tick under this swing low, 1 tick under, and you can see the sort of targets you can have here, much larger targets. And this one here, which a nice pullback, it's also a pivot bounce, which improves the probability. Look over here, you can see that really took and actually took this high out up here as well. Let's look at some shorts. Now if we can see here that the market's just rolled over. Okay, so you can see here we're just starting to punch through the 200, which we'll talk about again in a moment. It's a 2B. Here's another 2B. So we're looking at this point here is there, that point is there, this point is here. So once again, look at these great moves. So you can see here we're effectively bouncing off the 89.34 up here. We can see that the 8 is under the 34 price actions. Now this is on the anchor chart, basically a 34B. This is what we traditionally call a 34.89B. That of course we traditionally call an 89B, except now we're looking at the anchor chart. We can see we're getting a bounce off the EMAs on the anchor as well as the EMAs on the entry. So this is what we call true sweet spot trading. So another thing here is, and just why I'm on this chart, I can't help mentioning this, notice here on this that with this is a 1D, it's a counter trend trade, but just while we're here, notice here how we're bouncing off the 200 and the pivot at this point as well. next trade, or next chart I should say. So we can see here we've got multiple 2B entries. Here's one there, there, here, not so good that one. Here's this one here. And what you can notice here is, notice that at the higher we get, the greater the angulation. Now with any trend following traders, as we begin to gain more and more angulation, that is, once we see price action angling steeply away from the EMAs, the alarm bell should start to ring. Okay, so notice that angulation away. Notice we're starting to get angulation. Also look at, we're starting to get divergence. Now what that means is that as we get 3 or 4 5 trades in a row, you want to be ready to pull your stops up quick smart. So your stop, where would it go? Under here, under here, under here. Now in a faster moving market, most of you are aware, I like to use a fixed stop. So my entry might be up here for an example. Let's say up here, my stop might be here. But you can see here you've got a great opportunity, and this is, by the way, oil, and it really wouldn't matter what market you're looking at. They all have similar personalities when it comes to this. So here we can see another chart. So we're looking at CL again. This is during the New York session. We've got a bounce, and see we're bouncing almost on the 89 and the pivot at the same time, and this is this point here. Let's say 2B, 2 bounces. We're bouncing here and we're bouncing here. Now we come down here, right down, we're right on the pivot. Okay, so we're not really interested in trading normally right on the pivot here, but we rally up. Notice this really strong move. It's a T3, and notice here we've got the same, of course, it's the same price action here. It's a pivot. I would call this also in a 2B. We're bouncing off the 89, even though there's a slight 200 overshoot. You're bouncing on the, that's the 200 of course, sorry, and the 89, and pivot on the anchor. The next chart, this is the Globex Open. Price action comes down, we get a bounce on the 89, which is this one right here. We rally up, that turns into a T10 on the anchor, so we roll over, and then we get this here, and I've marked that up as a 2B, which basically is this point up here. Okay, so you can see here we've rolled over, we've had our T20 up here, the 34 is now crossing under the 89, which usually signifies a really strong trend. Now just while we're here, you'll see this time and time again where we come down, and you'll rarely ever see me selling into the 200 for the first time. Nearly always you'll get a bounce off the 200. What happens with a very high percentage of those cases, will come up and bounce off for 34. Now what can happen, of course, is it can be a 2B and the market continues, but this is where understanding what you've rolled off. Of course, if you've already had a really strong move, you're getting a whole lot of new lower lows, it's a pretty good sign that you're in a downtrend. Next one, I haven't marked this up per se, but you can see here we've got a fanning 89B. There it is, there, here is here, there is there. Now notice these blue and red dots that I referred to before as my ATR, and you'll actually see these don't stop and flip until I get a third close. Now for those that do have TradeStation, you can actually have that these plot either on the close of the candle or tick by tick. I wait for the close of a candle. So if you don't have an ATR, you're waiting. So see how it's blue here? This means I don't go short. Okay, so no shorts until here, no shorts until here. Very similar to the T1, the super scalper that plots, except you can see here the super scalper plotted and the market still rallied up and would have taken me out just up here because that went up by 1 tick, but the ATR kept me in the trade. How you trade without having the ATR is very simple. Just wait for 3 lower closes. It does exactly the same thing. So once again, the principle here, and you can see here it's bouncing off the 21, and it's not quite a deep enough pullback to be bouncing off some of the other EMAs. Okay, up here I've got just a couple of other comments here. This is some live trades I did here, but the point here is this is a 2B. Now we're not looking at the anchor chart, and what I'm really encouraging traders to do is to go for a higher risk reward, or going for a bigger reward on these, which is something I keep slapping myself around. Most of you know I'm a scalper. I do great. And by the way, down here I've little comment, I've got hit +5, and most of you are aware that when I hit +5 I'll usually go to break even. Sometimes I'll wait to +7, but anyway, I went to +5 too soon, and it come back and stop me out with only +1, which is a bummer. But anyway, but the point I wanted to bring here is you can see here you can go on that. Now that's a 2B. This is a 2B. Now that turned into a bet the farm as well. So you can see here we've got a double top with divergence, but these are both 2Bs. But are you starting to see a pattern here in the sort of returns you can get on these? So coming down, we've got on the anchor, if we were just to look at the anchor, and what we're looking at here, this is the ES, right? Okay, so this is the ES 1 point or 4 tick candles. Technically they're bricks, but let's call them candles. So you can see here we're touching the 21, and so you've got 2Bs all the way up here. Okay, but you've also got a fanning, a good trending market. Now just above here you can see that red line, that's a pivot. As I say to all traders, we're always saying to ourselves, and when I'm coaching, where's price action heading to? Where's price action heading to? What we're looking at the right hand side of our screen, what is my MACD telling me? Okay, what's the long-term stochastic telling me? Because you want to be reading the market. The next one here, we've got a 2B. Now you can see here we've come back, we've supported by the 200 and the 89, and that's this spot over here. All right, and you had another one just there, which is that point there. Once again, your risk reward on these is absolutely outstanding. Now what I've got here is a couple of tick charts for you. Now first of all, for our traders, may as well give you a little lesson here as well. Notice the angulation, notice how price action, this is a 233 tick on CL, on the black gold, on oil. Notice how the EMAs are angling strongly away from the 89 and even the 34 here, and we come down, we get a pivot bounce. So this is a T19. You can see we've got some slight divergence, nice angulation, and a pivot bounce. Thank you very much. Now price action rallies up, we then hit the 89 and the midline pivot, and that's this point here for a 34B and 89B. Thank you very much for a nice 2B. Next one, we can see here just another one. Oh look, while I've got this, I may as well just tell you about this setup. You can see the 200, so we're looking at a 550 ES for the New York session. So we've got here what we call, and we're on the tick chart of course, we've got a 200 EMA overshoot. So we've shot past the 200 on the entry chart. Look over at the anchor chart, you actually have a 200B, a 200 bounce on the 1597. So I like to use here the 550 and a 1597. So what we call a 200 overshoot, which is a very bankable trade with a 200B. Okay, a great combo. Now back on the 2Bs, this is a 2B. We've come down, we're bouncing here. I've had the super scalper plot. If you don't have the super scalper, and if perhaps your trading tick, you're waiting for a close above the 8 EMA, bouncing on the 200, close above the 8, thank you very much, and we're bouncing of course on the 89. Next chart. Now this is just another quick example I've got to give you that it really it's sort of, I suppose we could say it's really a close relative to a 2B. This is another case of a 200 EMA overshoot, I call these, and it's bouncing on the 89. Now, as much as this is actually the market is rolling over, but these are a fantastic trade. Don't ignore these trades. When you shoot past the 200 and you're bouncing on a major EMA. Now let me explain the logic again. What actually happens, traders, is this: if you were trading off this anchor chart and you were waiting here for either the rule of 2 or a close above the 8 EMA, or maybe even the super scalper to plot is what actually plotted here, that would not plot until you're up here somewhere. When you're trading off the, and I can see here, for some reason I'm just going off I'm just trying to get this gone off screen a little bit here, never mind. But when we're trading off the entry chart, we're entering here rather than up here. We're getting in much earlier. So even if the move on the anchor is very, very small, it's still a fantastic return on your entry chart. Now what I'm just going to do here is, I don't know what I've done here, just never mind. I don't think it's making too much of a difference. Okay, next chart is some other classic 2Bs here. We've got a 2B coming down. We know that traditionally as an 89B, 89B, 200B, 200B, and what's actually happening here is we're coming down and we're bouncing off the 34 in these particular cases. Next one is this one. We've got a 2B, so we're looking at gold. So slight overshoot here, but it's still bouncing on the 200, and look at this here, we're bouncing on the 89, bouncing on the 89, bouncing on the 34. Over here we're getting off screen a little bit, but here we've got another 2B. Once again, look at the moves on these 2Bs. So let's now go and have a look, traders, at let me just get down. I just want to show you a couple of things here on the charts that I've marked up. Now this one I think I took a screenshot earlier. This is gold. We'll have a look at where we are with gold now. So this is today's price action. You can see here got a 2B. Now I'm waiting for the super scalper to plot. So if you're going back to test this straight away and get it really excited, I want the super scalper, because the candles are quite often still forming. The super scalper is really the rule that qualifies this. Or if you don't have the super scalper and you like the idea of the ATR, which keeps me out of a lot of losing trades as well, just wait for 3 high closes, you're in. 3 high closes, you're in, because my ATR does not stop and flip until, okay, that actually happens anyway. But that's a nice little winner. That would have been a winner. Let's just scroll back here a bit. Now where's price action gone today? Now let's just have a look at this here. This, and if we look here, that there is that there. Okay, now with this is actually a 2B. It only gave you 1, 2, 3, 4, 5 or 6 ticks, and it actually rolled over. So here it come down, it was an 89 bounce, it bounced off the midline pivot as well, rallied up and turned around. Now if you hadn't have taken some profits or gone the break even, and what you're going to be aware of course, when you start to make new and here you're making actually some new lower lows, the market may be dropping. So you call that a loss, call it a win, call it a break even, whatever you want to do, but it did go rally up 1, 2, 3, 4, 5, just say 5 or 6 ticks, come down, it would have taken you out by 1 tick. Now what this actually formed was a double bottom, we can see there, with divergence. So what does that mean? It's basically a bet the farm trade, because it's with the trend. What's the direction of my trend? My 200 still heading up. Look at the EMAs on the anchor chart, they're heading up. Thank you very much. That's a 2B, that's a 2B, thank you. Now scrolling along, now of course on the way you've also got here, what else have we got? You've got 34Bs, so I'm just ignoring for the sake of this exercise other trade setups. Now you can see where some of these 200Bs sort of start to form or become counter trend, and this signal for a counter trend is this: when you come down here, traders, and you're making new lower lows. Okay, this is a good indication, and it's another lesson for another time, that we've got a new trend setting up. Now here is, what have we got here? Another classic 200 EMA overshoot. And what's happening over here? 89 bounce. Remember those charts I showed you earlier from other days? It's a pattern you see every day. Okay, you can see we've had a 200 overshoot. We're bouncing off the midline pivot, thank you very much, which dramatically, it's also a T3, and here we're bouncing on the 89, and to top it off, you've also got divergence there, which you can see. Let's go and have a look at the NQ. So I've marked up the NQ from Monday's price action. So we can see here, let's just go here, price action came down, and we're looking at here is a 2 Renko, so these are 8 ticks, $40 a brick. We can see we've come down, we've got a bounce on the 89. Look over at your anchor chart, you're bouncing on the 34. Thank you very much, and look at that return. Let's scroll along. So I've already marked these up. Now a little thing I'd just like to mention here, remember I said that you don't want to sell or make the first sell, and my students that are, or my coaching clients that are watching this know we talk about this every trading day. The first bounce, if it bounces off a 200, a very high probability that you're going to bounce off what? The 34. In this particular case we bounced off a 34, and it's actually formed, as you can see here, a 2B. Look over here, see that there? So we can see here that the 34 and 21's in a downtrend. We've rolled over, and there's a nice little sell there. Once again, a good 1 to 1.5. Now this actually ended up forming a really nice 2B trade, 2D, sorry. You can see here we had a lower low, divergence, and we had divergence. Now with 2Ds, of course, double divergence, you've got a much greater return on those as well. Let's just scroll along. We've got a few 2Bs here. Let's have a look. So this one here is here. See, we've come down, we're touching the 21, 34. So traditionally we would call this a 34B, 34B, 89B. But what we're doing is just looking at our anchor chart. The anchor chart is basically confirming we're in a nice uptrend. Look at that. Of course, just at that stage you're only looking at the far right hand, even though we've gone a bit further. But the point is here, winner, 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 chicken dinner. Another one. Now this particular one, you were stopped on this trade because I think it ticked down 2 ticks. Low of 1650, low of 16. Now with the NQ, for those may have forgotten, I like to have my stops on the NQ 2 ticks below a swing low or swing high, or above, where all other markets I will go for 1 tick. Now I still would have been stopped on this particular one. Just the NQ can be very whippy. And also be aware, traders, that the more 89 bounces you have in a trend, and the deeper the pullbacks, the greater the chance that you're going to roll over. So I call it looking for 3 hills, and let me just explain this to you. So when I'm looking at a trend, I look for waves, and the Elliott wave theorists would what we call it, scholars would tell you they're looking for 3, 4, 5 waves. Okay, and so we're looking for those waves, and what we know is that as soon as we start to get these deeper pullbacks, it doesn't mean you don't necessarily not take the trade, but it means you just really start to be more wary and be ready to pull your stops up if need be. Okay, so that was a 2B. I mentioned there we got stopped on that one, but then you had a little rally. Here is the market open. Most of you know I don't trade on the ES, the NQ. I don't trade the first 15 minutes. I call it the killing field. It did come down. We had a bit of a bounce here. Now here we did have a bounce off, and this is actually a 2B. And what time was that? That was okay, that's 9:47. Notice here that this is a much deeper pullback, traders. All right, you're taking out the lows. This is technically becoming a counter trend 2B. You are bouncing on the 89 here, but we're basically, at least in the short term, have a change in a trend direction. When you have these bouncing off for 200 and much deeper pullbacks, that is, you're forming new, in this case, new lower lows and new lower highs, very high percentage you'll bounce off for 34. So you're really looking at scalping these. But you can also see at this stage we started to get a convergence of the EMAs. I'm actually doing a members Q&A in the next day or two where I'm going to talk about that. I won't talk about that now in this particular video, but anyway, just going to tell you how to handle these and how to trade these. So over here we've now got A2B, so let's just go back here. We can see here prices rallied up off a T3. Many T3s will turn into 34Bs. We've got A2B, and notice there we're hitting the 21. Now down here this is a 34B, but it's just a 34B. Going along quickly here, let me just scroll along. Okay, here again we've got a 2B. Let me just show you here. You can see you've got a 34B on your anchor, and it is a 2B, sorry, a 34 pivot bounce 89. It's within a couple of ticks. Close enough is good enough. And just remember, traders, with all trading, you know, it rarely does everything exactly line up. You know, sometimes you're going to have really deep pullbacks. Sometimes you're going to have the 34 and 89 are sort of misbehaving even on the anchor, but your 200 still in a good downtrend. So you just got to really make a judgment call. Just one of the rules to consider is what of a long-term stochastic doing on my anchor and my entry. Okay, if my long-term stochastic on my anchor is well and truly overbought or basically in a downtrend, that's a really good indication that we've got still somewhere to go with the market. Now back here, just another couple of minutes here, we can see here we rallied up. We then had a 34B again, sorry, my apologies, that was a 89B, bouncing off the 89, and a pivot bounce. Now it only come down a few ticks, rallied back up for a perfect double top. Okay, it went to the double top to a tick. Now when we bounce off either the 89 or the 200 with the trend and you have divergence, what do we call that? We call that a bet the farm trade. As always, traders, when I say that, it's tongue-in-cheek. We say that affectionately. You still follow the exact same money management rules, but it's a very high probability trade. So double top, you've gone up for hit a 2B, you've gone short, you stop, should be one tick or CNQ, so a couple of ticks above there. Come down, you bounced, come back up, tested that. Notice that divergence here, and it started to fall away. Now we then come down here, we then started to change trend direction, and you can see that there where the 8's above the 34, we're now trending up. This is a 2B until finally we come up here. So we had a 2B here, the old saying follow the gold. We've come up here. Notice here we're bouncing on the 200. Look over here, we're bouncing on the 89. This is a 2B, and by the way, it's the end of the trading day. We're going into the Globex session, so you would have sort of stopped trading there anyway. So traders, what you can see is there that the 2B, if you go back and start doing your counts, it's a very, very high probability trading methodology. It works brilliantly. It's just a great solid methodology. So what I'd recommend, traders, is that, you know, go back, take the time and master the 2B, because it's just a great methodology that will make you money consistently. So wrapping that up, join my private group coaching program. A word from the sponsor again. Okay, we've got 5 seats available in the private group coaching. Of course, There's now over 15 different strategies in the Day Traders Fast Track program, and I have to say this, traders, is that all my coaching is there. That is, everything's in the Day Trading Fast Track program. But what we do in the private coaching, we really drill down on the hundreds of trades over a month, both fixed charts that you've got. I do new marked up charts every day. You can download those. There's a special spot where you download those from. We spend a lot of time on the head stuff. Let me tell you, it's a pretty intense 2-hour session. Now, out of the 15 strategies, we probably really focus on about 8 or 9 of them. Okay, you can do this, traders. What actually happens with trading, you'll have aha experiences. Now, with trading, as you hear me say regularly, you can't be half pregnant. You've got to be committed. If you're not committed to mastering the art of day trading and working on your craft, you're better off on spending your money and going on a nice holiday. Truly, you really are. But if you're serious about mastering the art of day trading and trading in general, you need to become what we call a student of the markets. You hear me talk about practicing the fundamentals every day, and you probably heard me talk about John Wooden, and John Wooden, as we know, Coach Wooden was the greatest basketball coach ever. And I know you've probably heard me say this 100 times, but he would get his players and he would say, I want you to do 500 layups, or I want you to do 500 jump shots today. And of course the players would say, I can do that. He says, yes, I know you can do it, and I want you to do it again today because I want to know you can do it when it really matters. That's what he would say. Coach Wooden would even teach them how to put their socks on and how to have their socks on and how to tie their shoes correctly. Seriously, right down to how he wanted them to lace their boots. And the reason being was so that they wouldn't get sore, wouldn't get blisters, and there weren't any accidents. So he was very, very really, the fundamentals mattered. And likewise, when it comes to trading, you hear me talk about doing your hour of power, going through your trading plan, going through your rules, saving the charts that I give you and marking up your own charts, and every day going through because and looking at them, reviewing them, because in the end, everything I've shown you here on the charts, do you know what they are? They're patterns. That's right, they're patterns. Trading is a pattern solving exercise. Now that's where it really, I'm going to say, it gives me the shits where people will sometimes say, race strategies don't work, they're crap, or they'll write something negative about them or whatever. Well, traders, if you're entering a trend within 4 or 5 ticks of that trend starting, or a retracement or a pullback, the only way they're not going to work is either if you're in too late or you're in the trend too late. It's so logical, the 2Bs, the trend following strategies are so logical. And the T25, the 2 to 5 candle pullback, that's just the old floor trader strategy that's been around for 100 years because it works. These strategies work, but what makes the 2B so good is you're waiting for basically 2 trending markets, your anchor chart and your entry chart. You're trading the pullbacks and they're trend continuation trades. They're not breakout trades, they're trend continuation, and you're trading on a lower time frame in the direction of the higher time frame. That is what makes the 2B so good. Thank you, traders. Look forward to seeing you perhaps in the coaching group, and I do have some members Q&A's going out in 2 or 3 days where I've got a lot more that we'll be covering for a whole lot of other things, and also questions from members. I've got quite a few there to cover. Thanks, traders. See you on the next video.